Doesn't it feel like we're sometimes living through the next major finance film? You guys know The Wolf of Wall Street, The Big Short, The Boiler Room. It feels like right now, in real time, no joke, we're living through the next major film with everything going on with Silicon Valley Bank, New York Signature Bank, and now it's going on with Credit Suisse, which right now, in real time, when I'm making this video, the stock is down 16%. It's at $2 a share, and you guys can see this company has not been doing well. This bank has been struggling, not just recently, but over the past decade. You guys can see their stock was at $80 a share back in 07. Well, really, it's been almost a decade and a half, over a decade and a half since that peak. And now again, like I said, it's at $2 a share. So something's been going awfully wrong at Credit Suisse. We're going to break down a bunch in this video. So if y'all find value, hit the like button, make sure to subscribe, and don't forget to get up to 17 stocks for Moomoo. We'll talk about that later, more on that later. Those are linked down below. And with that being said, let's dive into it. So right off the bat, guys, what Credit Suisse is, well, it's another bank. And you guys can see here, they provide financial services in Switzerland, the Middle East, in Europe, Africa, the Americas, and Asia Pacific, essentially all across the world, right? The company offers wealth management solutions, including investment advice, discretionary asset management services, risk management solutions, such as managed investment products, wealth planning, succession planning, and trust services. They also provide financing and lending solutions, including consumer credit and real estate mortgage lending, real asset lending related to ship and aviation financing, standard and structured hedging and Lombard lending solutions, as well as collateral trading services, investment banking solutions. And in addition to that, the company offers banking solutions such as payments, accounts, debit and credit cards, and product bundles, asset management products, equity and debt underwriting, and advisory services, cash equities, equity derivatives. So this bank is doing a little bit of everything, right? They have their hands in everything. And one thing that's mainly sticking out to me here, which kind of coincides with their stock price, is the fact that their assets have been decreasing massively, not only over the past couple of years, but over the past decade and a half at this point. You guys can see based on this chart here on macro trends, back in 2011, Credit Suisse had $1.3 trillion in assets. Then in 2014, that came down to $1 trillion. Then in 2018, it came down to $850 billion. And right now, when I'm making this video in good old 2023, they're down to $720 billion, which is still a massive amount of assets, but it's hard to look away, to not pay attention to the fact that those assets have come down almost 50%. Not quite 50%, but almost 50% in the past actually over a decade at this point in time, which is not the best sign for the bank. And you guys know, we'll talk about it right now, this company, this bank has not been doing well internally. They've been struggling and they might be going under. They might be the next bank to go bust. So let's talk a little bit about what's going on, and bear with me, guys, because I do have a ton of notes here on my phone. This is fresh stuff that's going on right here. Well, some of it's not fresh, but really the drop here is on new concerns that there's not going to be any new funding here. We'll talk about that in a second. So what's going on right now? Well, on Tuesday, which was yesterday, Credit Suisse acknowledged material weakness in its financial reporting and scrapped bonuses for their top executives, which we'll talk about more later in the video. Credit Suisse said in its annual report that it had found the group's, quote, the group's internal control over financial reporting was not effective, end quote, because it failed to adequately identify potential risks to financial statements. That is not good right off the bat, and that's going to, we'll talk a little bit more about that in a second here as we go over Archegos, that hedge fund that you guys probably remember from recently that went bust. We'll talk about that in a second. The board concluded that the material weakness could result in misstatements of account balances or disclosures that would result in a material misstatement to the annual financial statements of Credit Suisse, the annual report said, and Credit Suisse is urgently developing a remediation plan to strengthen its controls, which who knows how that's going to work, if that will work at this point. And do you guys remember the Archegos hedge fund? Big hedge fund out there that went bust, that caused a lot of turmoil on Wall Street. I forget how long ago that was, a year ago, maybe less, maybe more. Time is flying at this point, guys, but it was recent. Credit Suisse investment bankers allowed Archegos Capital, get this, to take voracious and potentially catastrophic risks that culminated in the U.S. hedge fund spectacular collapse back in March. So I guess that was about a year ago, costing the bank $5.5 billion. Yeah, that's billion with a B, guys. Yeah, $5.5 billion. Credit Suisse published a report by law firm Paul Weiss and Rick Rifkind, Warren and Garrison, which uncovered persistent failures by senior managers to address risks connected with trades made by Archegos. So essentially, there was negligence in, the upper management there at Credit Suisse that really led Archegos to making these horrible investment decisions. Archegos used borrowed money to build massive positions in stocks including media companies Viacom, CBS, and Discovery, and was unable to pay back its lenders when the share prices ultimately collapsed, which you guys know they did, Discovery and Viacom, CBS, and its implosion cost global banks including Morgan Stanley and Japan's Nomura, either way, more than $10 billion. So it kind of had a ripple effect there in some other major banks. And Credit Suisse, after this, they actually punished 23 of their employees following this collapse, canceling or clawing back their bonuses, totaling $70 million, and firing 9 staff members, including top investment banker Brian Chin and chief risk officer Laura Warner. Either way, they got fired. 9 people got fired, and 23 of their employees have to face, the wrath of Credit Suisse, essentially, guys. And the independent review found that the Archegos-related losses were the result of a, quote, fundamental failure of management and controls in Credit Suisse's investment bank, and specifically its prime services business, which provides trading, financing, and advisory services to hedge funds and institutional clients. So yeah, guys, right off the bat, their negligence essentially led to Archegos going belly up. And of course, you can't really blame everything on Credit Suisse for Archegos, for their downfall. But at the end of the day, guys, they didn't do what they needed to do. They didn't do their job fully to assess risk and really lay it out for Archegos in the way that they should have, right? And the big thing here is there's no more funding from Ammar al-Qudari, which I believe is he's the president of the Saudi Arabia Bank, or one of the big banks out there, who's been funding Credit Suisse. Let me actually look up the bank real quick, guys. Yeah, he's the chairman of the Saudi National Bank. So let's talk a little bit more about this. So he said, quote, "The answer is absolutely not," when he was asked about more funding for Credit Suisse. He said, quote, "For many reasons, I'll cite the simplest reason, which is regulatory and statutory. We now own the, Saudi, right? What was it called again? The Saudi National Bank. They now own 9.8% of Credit Suisse, and if they go above 10%, all kinds of new rules will kick in," which makes sense. Regulations for 10% ownership, that makes sense. And he said, whether be it by our regulator or the European regulator or the Swiss regulator, there's going to be new regulations that kick in. And quote, he said, "We're not inclined to get into a new regulatory regime." And I believe he just gave a ton of money to Credit Suisse recently. The Saudi National Bank committed $1.5 billion of the $4 billion in new capital Credit Suisse raised to fund its overhaul, as Credit Suisse back in October embarked on a radical restructuring plan that entails cutting 9,000 full-time jobs and spinning off its investment bank and focusing more on wealth management. So he's like, listen, the Saudi National Bank, they're like, look, we gave you enough money already. We're not looking to fund you anymore. They already gave $1.5 billion of the $4 billion raised, for the overhaul. And customers, on top of that, to throw another wrench in here, that, on top of them not getting new funding from the Saudi National Bank, customers withdrew 123 billion Swiss francs, which totals about 133 billion US dollars from Credit Suisse just last year, mostly in the fourth quarter, and the bank reported an annual net loss of nearly 7.3 billion Swiss francs, or $7.9 billion, its biggest since the global financial crisis of 2008, guys. So needless to say, guys, there's a lot going on right now with Credit Suisse. It looks like they're going to be the next bank to go under just based on the stock price on its own. I mean, you don't go from $80 to $2 with a great business. There's clearly something going on under the hood here with Credit Suisse. Money's flowing right out of the bank. You know, the assets have literally cut in half almost over the past decade. They're scrapping bonuses for board members. Executive board members took home $32 million in fixed compensation, but no bonuses. They did not receive any bonuses, which boo-hoo, right? I mean, whatever. Whatever. But clearly there's a shift going on. They're trying to restructure it, and the Saudi National Bank is not looking to put more funding into this bank, which is causing now really a speculation that we're going to see something similar to what we got with SVB, maybe some other banks out there that we saw panic in, right? That's kind of what we're seeing right now in Credit Suisse. We're seeing panic as there might not be any fresh funding, at least from this bank right here, the Saudi National Bank. We'll see if anyone else steps in. Time will tell. But overall, guys, that is what's going on right now in a nutshell. We're not going to talk too more into it because we're already in here well over 10 minutes. And you guys can see this is pretty much causing a ripple effect across a lot of these other bank stocks. You guys can see Credit Suisse is down 15%, which is bringing down some of the other big names out there. We have BAC, Bank of America, down 2.2% today. JP Morgan is down 4% today. We have some of the other banks, regional banks that got hit. Then they rebounded yesterday. Now they're going down again. First Republic Bank's down 9-10%. We have, let's see some of the other ones. PNC is probably getting hit. Yeah, 4% for PNC. I'm just naming ones off the top of my head right now. What's another one that got hit? Washington, or was it Western, or whatever the heck it was? Western Alliance. Let's see. Western Alliance, that's got to be down. Either way, you guys get it. The whole market is down right now. A lot of these bank stocks, most of them are down right now. I mean, look at the Russell, down 2.5%. The Nasdaq's down 1%. The S&P's down 1.6%. Dow's down 1.7%. The VIX is up 16%. Yeah, you guys better be ready for more volatility, more red. And with that being said, I'm going to wrap up the video. Hit the like button. Let me know your thoughts in the comments. And don't forget to get up to 17 stocks from Moomoo. All you have to do is use that link down below. Open up an account. You get 1 free share of stock. Deposit at least $100. You get another 6 free shares of stock. And if you deposit at least $1,000, you get another 10 free shares of stock, totaling 17 free shares of stock. So if you want to help out the channel and you want some free money, use that link down below. And with that being said, I'll catch you guys later. Peace out.